Good morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, daily chart of the ES, and I've left the fibs up just for a minute. I just want to demonstrate a couple of things and point out potential convergences here. The middle band, as we talked about yesterday, has been confirmed as resistance. If you watched the webcast yesterday, we said, look, last few days, the one thing the bears have not been able to do is to break through the 20-day moving average and then have that middle Bollinger Band confirmed as resistance. They walked it right up to the doorstep yesterday, and it turned it away. And now we're back trading. We put in lows of 21.75 overnight, and we're back trading 24. So we're back to this area here. And, you know, from a bullish perspective, they're trying to establish 20 as a very, very solid support area. I don't necessarily buy into that, because if 20 was going to be a solid support area, that's your low right there. We go back through the middle band, as we've done so many times before, and we move on. So this move is acting differently. Not that it's going to turn out differently, but as of right now, as of 7:10 in the morning Eastern Time on June the 5th, it's acting differently than every other breakdown below the middle band since 1340 quarter, where the rally began. So you got 20 on the low, on the down. You've got middle band, so basically 46 on the up. That's your playing field. So many catalysts in the next few days. You know, today we've got ADP coming up in about an hour. Then you've got factory orders, ISM services. You get the beige book at 2. Tomorrow you've got jobless claims, the Challenger cuts, the Bank of England, the ECB get involved. Then Friday, jobs. So from ADP at 8:15 on out, this week's going to start to turn back into the jobs report. And not to get ahead of ourselves, but the reaction to that non-farm payroll number on Friday is going to really probably define the next couple of weeks of trading. You've got this move down to test 1620. You can see the bands, the Bollinger Bands, are starting to get tighter. Not this tight. I mean, this was once every year or year and a half or so they'll get this tight, which is how you get moves up to the third band. But they're getting tight, and if middle band wants to be resistance, then we should head lower. So the question becomes, so if we start to spill out of these lower bands, the couple areas I've got, we'll set 17.5 is a pretty obvious area. I think a lot of people have that 17, 18 area as a convergence point. If that can't hold out, then the 50-day exponential moving average comes in, right in the 1607, 1608 area, and you've got a couple of fibs here. You got the 50% retrace of the shorter move, and then you've got the 23% retrace of the larger move of the 1340 quarter up to 1685.75 move. So 04 to 08 with a moving average in the middle. If we do get a big down day because of jobs or for any other reason, that to me is a logical support point. When we do hit support on this move down, if we get a larger move down, then resistance for me, the new quote-unquote middle band to be retested, is going to be the 1620. Support here. Support here. If we move lower, it'll absolutely be tested as resistance, so keep that in mind. Okay? So let's ride out the news. You got a lot of volatility during the day. If you're a day trader, I don't know why you're holding overnight right now. We're not. Because the day is giving you everything that you need to do what you need to do for your business and move on to the next day. And with Europe sometimes knocking it down, sometimes not, we're getting back into overnight risk type of activity. So keep that in mind. Okay, everyone have a fantastic day. Mike Vacchi, Princetontrader.com. Check out the website. Check out the chat room. Love to have you. I'll be back tomorrow morning with another webcast. Trade them well, everybody.